Good morning, ladies and gentlemen, and welcome to the BCL Industries earnings call for Q3 and 9-month FY26, hosted by InCred Equities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not a guarantee of future performance and involve risk and uncertainties that are difficult to predict. I now hand the conference over to Mr. Nitin Awasthi from InCred Equities. Thank you, and over to you, sir.
Thank you. I thank you.
Sorry to interrupt, sir. Your voice is not audible.
Now?
No, sir.
Is it audible?
Yes, please proceed. Sorry to interrupt again, sir. Your voice is not audible.
Hello, can you hear?
Yes.
Okay. So from BCL Industries Management, today we have the Joint Managing Director, Mr. Kushal Mittal, the Chief Executive Officer, Mr. Varun Gupta. I would now like to invite Mr. Kushal Mittal to initiate the proceedings with his opening remarks, post which we shall open the floor for a Q&A session. Thank you, and over to you, sir.
Thank you, Mr. Vasti. Good morning, everyone, and a warm welcome to BCL Industries Limited's Q3 and 9-month FY26 earnings conference call. Thank you for joining us today. Let me begin with a brief discussion on the prevailing operating environment for ethanol, followed by an update on strategic progress across the business and the key drivers for the quarter's performance. India's ethanol blended program has reached a defining milestone. During FY2025 blending levels have effectively achieved the E20 target, with reported blending at 19.98%. The program is now gradually transitioning to its next phase of evolution. Policy discussions are underway, including deliberations by relevant government committees and NITI Aayog to explore pathways for flex fuel engines and other usages for ethanol beyond E20. Looking ahead, Cycle 2 tenders are expected in the near term. We are hoping for allocations to improve. There may be a chance that the mix may be skewed towards FCI rice. Volume visibility remains linked to policy clarity. Till then, the company will continue to utilize its capacity through ENA production. The industry has seen a growing shift towards grain-based ethanol, with FCI rice and maize emerging as key feedstocks. BCL operates a flexible unit capable of processing multiple feedstocks, positioning BCL to insulate its operating performance from industry volatility during the quarter. Maize prices have softened to around 20 to 21 rupees a kg, which allows the company to compete aggressively in the ENA market. Let me now provide a strategic update on the company's ongoing transformation and growth journey. During the quarter, we also announced to acquire the remaining 25% stake in Swaksha Distillery Limited, which is to be completed by 30th of June 2026, after which Swaksha Distillery will be a wholly owned subsidiary of BCL Industries Limited. The total investment outlay for this acquisition is expected to be around 55 crores. This strategic move will allow us to further consolidate controls, streamline operations, and unlock synergies while significantly strengthening BCL's leadership position in grain-based distillery segment. A key differentiator of BCL continues to be our state-of-the-art distillery infrastructure, which allows us to operate efficiently while seamlessly switching between ENA and ethanol when required. In an environment where ethanol demand has remained subdued due to industry-wide oversupply and OMC allocations being lower than anticipated, this inherent flexibility has enabled us to optimize production, balance volumes, and maintain stable operations. I would like to highlight that Swaksha Distillery has received all necessary approvals and licenses under the No Increase in Pollution Load scheme for its production capacity to be changed from 300 KLPD to 350 KLPD. In parallel, we continue to progress with our planned 150 KLPD capacity expansion at Bathinda. Therefore, our capacity is set to be increased to 900 KLPD by the end of FY26. ENA continued to deliver good performance, supported by healthy offtake from our PNML portfolio and consistent demand from leading bottlers across the country. During the quarter, the ENA volumes increased by 60% year-on-year to 15,330 KL, reflecting a sustained demand momentum. PMIL saw a total sales of 488,000 boxes in Q3 FY24. We have further strengthened our presence in the IMIL segment with the launch of Punjab Special Whisky in glass bottles, reflecting our intent to elevate brand positioning and improve realizations. This also marks an important step in our phased approach towards entering the IMFL segments, supported by structural industry growth and increasing consumer preference for premium offerings. On the sustainability front, BCL remains amongst the few distillery players in India to use agricultural waste to meet companies' fuel requirement. We currently operate a 60-ton per hour paddy straw-based biomass boiler and plan to commission an additional 55-ton per hour paddy straw-based boiler alongside at our Bathinda ethanol plant. With these initiatives, we're on track to meet 100% of our steam and power requirement through paddy straw, which will provide the company with further cost savings. With respect to our edible oil business, we have fully exited our packaged oil business operations with stock liquidation underway and expected to be completed by the end of financial year. We continue to import crude edible oil in bulk for soft oil refining, as that allows the company to fetch a better price in the global market. However, BCL has now decided to report its oil trading business separately going forward. This will further enhance the transparency in the results and will give more clearer insight to our investor and everyone in the market on the different segments of the company. Our maize oil extraction unit at Swaksha Distillery is on track to be commissioned by Q4 FY26. Now, let me move on to the quarter's operational and financial results. Our distillery segments delivered a robust volume growth, with ENA volumes maintaining strong momentum in both Q3 and 9 months, rising 60% and 71% year-on-year. Ethanol volumes reached 47,420 KL in Q3. EBITDA for this quarter from distillery segment stood at 60 crores, up by 42% year-on-year, while refinery revenue came at 153 crores for Q3, with EBITDA margins of 5.23%. For Q3, BCL delivered a strong performance with a total revenue of 758 crores, EBITDA increasing by 41% year-on-year to 68 crores, with EBITDA margins expanding by 270 bips, largely driven by easing raw material prices and flexibility in using sources of energy. That increases by 69% year-on-year at 35 crores. While the industry environment continues to face policy-related uncertainties, BCL's core strength in grain procurement and processing sets it apart. Although we anticipate tough market conditions in the times to come, we expect BCL to ride the waves confidently given our operational efficiency. Thank you.
So shall we begin the question and answer session? Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Bala Murali Krishna from Oman Investment Advisors. Please go ahead.
Good morning, Kushal. The first question is regarding the CapEx is going on stream. So in this quarter, we will commission 150 KLPD at Batinda and also 25 KLPD of major oil extraction active structure at.
Yes.
Yeah, okay. So pertaining to margin, so there is a correction in the maize prices to such a good extent, but still there is nothing is reflecting in the margins. So what could be the reason for this, and going forward, how we can see the margins? Because the maize prices are at lower levels as of now also as we speak.
So as you may have noticed, the company has tried to increase its ENA sales, given the lower allocation of ethanol. And since the ENA market has become extremely competitive, the company has been very competitive in the market. And ENA is now, the prices are significantly lower as opposed to ethanol. Hence, the company has to compete, and therefore, ENA currently has lower margins as to manufacturing ethanol.
Okay. So for the next year, what would be your CapEx plans? So to the 150 KLPD, okay, we can understand Batinda, and next year, what is the CapEx plan? And also from the maize oil extraction unit, what could be the revenue potential for the next year?
See, for now, unless there is a clear policy in regards to the roadmap of ethanol going forward, beyond this 150 KLPD, the company will review its future capex plans again before making any final decisions. So for now, our focus is toward the maize oil extraction and the 150 KLPD. And sorry, what was the second part of your question?
What is the revenue potential from this maize oil extraction? 75 KLPD.
The maize oil extraction and the refinery business will continue around the similar levels where we are operating at. So we did a revenue of around 150 odd crores this past quarter, and the figures will be around that only.
Okay, understood. So finally, on the ethanol supply part, so I think there is a lot of gap between the capacity and also the tenders which we receive from OMC. So even if we divert some capacity to ENA, still maybe we require some more orders to cater, and this 150 KLPD also now getting added. So what could be the gap between the orders and also our capacity, and how we're going to plan that to run the plant at 100% capacity utilization?
I'm sorry, I couldn't understand the question.
Yeah, I'll rephrase it. So because the OMC allocation is on lower side for all players, and we have a ENA market also, so we are diverting some capacity to ENA. But still, when 150 KLPD also get added to our capacity, so there will be huge gap between the demand and our capacity. So how we are going to plan to mitigate that gap?
See, for now, company will focus on maximizing ENA sales, PML portfolio. Yes, ethanol allocations are lower, We are expecting a C2. Let's see what that brings. The company will try to sell more ethanol to private companies, being Reliance and Naira, and see how much how we can bring our capacity utilization close to 100. It's an ongoing situation, and the company is trying its best for now to maximize its utilization.
Okay. Lastly, on maize price, so what is the current maize price in the last quarter and the current quarter? Can you please share this?
So maize prices have been around rupees 20 for some time now, given 5% here and there.
Okay. Okay, thank you. That's all.
Thank you. We will take the next question from the line of Pushkar Jain from Milli Capital. Please go ahead.
Hi, sir. Am I audible? Hello.
Yeah.
Yeah. I wanted to ask about the allocations. Like, when are the next set of allocations expected to be announced, and what is our expectation that about the allocations, like how things will move forward in ethanol?
See, I'm not aware when the next cycle will come. That depends on when OMCs decide for it to come and exactly what quantity would it be of. So yes, we are expecting some improvement in our allocation post the cycle too. But for now, it is not wise for me to comment on it with the limited information that I do have.
Okay, so it will depend on like OMCs whenever they want to do the next allocation. But sir, my the second question is regarding because of the price, is there a risk that government would reduce the price of maize-based ethanol from 72 in the next ESY because of the current margins, like currently some like less than rupees EBITDA? So do you foresee it as a risk?
Yes, it very well could be considered by the government. I'm sure they're aware of the current raw material prices in the market and the prevailing situation of overcapacity in the industry. So yes, maybe they could make a decision on that. But again, I'm not in the government, so it's tough for me to comment on it.
Right. Thanks a lot, sir. Thanks a lot.
Thank you.
Thank you. Next question from Deepesh Sancheti from Manya Finance. Go ahead.
Yeah, hi. Am I audible?
Yes.
Yes, yes.
Yeah. Hello, Kushalji. Congratulations on a good set of numbers. We've observed a sharp increase in ENA volumes. Could you elaborate the realization and the margin difference between the ENA and ethanol?
Yes. So for now, there's a significant difference in the prices of ENA and ethanol because, as mentioned earlier, we've had to sell more ENA, and we're now even exploring markets outside of India for ENA. Prior to the ethanol policy, a lot of our product used to be exported to Africa, but the Indian market could not, post the ethanol policy, became too expensive. Again, now we're exploring that market and other industrial uses for ENA in the country. So prices of ENA are currently around 59 to 60 rupees in the market. So quite low as compared to ethanol. But given the lower allocations, the company has no choice but to sell more ENA.
And all this ENA has been made from maize itself, or are we using FCI rice also?
No, FCI rice is used for ethanol. Maize or damaged rice is being used for ENA.
And out of this total ENA capacity, what is the proportion which is utilized for captive consumption by PML?
So PML is quite low as of today. So given my about I'd say 10 to 15% of my Bathinda's capacity is being used for my bottling unit.
Okay. So going ahead, I mean, what is the capacity utilization in this quarter? And how do you see going forward with the ethanol? And I mean, what is the future of ethanol according to you going ahead?
See, for this quarter, capacity utilization has been close to 100%, and we will try our best to keep it close to 100% in the coming quarters as well. See, the future of ethanol, again, I think is a very bright future. E20 is not the end. Ethanol blending policies are being introduced in neighboring nations also as we speak, and flex fuel cars will be introduced in India. And ethanol itself is a good product which can further be converted into sustainable aviation fuel, which I think has a very good future for India because given that we are now operationally very strong as a country in producing ethanol and have a complete ecosystem with a lot of SAF mandates coming into Europe and other nations starting from next year. SAF also, I believe, has a very good future. So overall, the ethanol policy has not just benefited companies like us. It has benefited the government in saving forex. It has mostly benefited the farmers as their produce has been, selling at a good rate without them having to worry about getting timely remunerations from companies. So ethanol has benefited the Indian economy as a whole, and I think the future is bright. There are slight hiccups. It might take some time for policy to formalize, but overall, we're optimistic.
The reason I'm asking is because we took the additional stake of Swaksha also. So are we seeing, green shoots? Are we seeing, does that, should it convert to the confidence of the promoters in ethanol business?
See, I'm not, the promoters of this company are not in this for 2-3 years. We're in this for the long run. We are quite confident that in the long run, the business that we're in will continue to grow and flourish. And of course, just like any other business, there are cycles that a business goes through of euphoria, then a slowdown, and again of stabilization, and then again there is a good cycle. So we're quite hopeful that in the long run, both ENA and ethanol are industries that will continue to grow.
Right. And besides Pernod Ricard, Amrut, ABD, which are the other ENA supply, other bottlers which we are supplying ENA to? Because you mentioned that we are also exploring exports.
Yeah, so Diageo is also a big buyer from us, from Kharagpur. And then there are various local bottlers from everywhere. Now, from Bathinda, we've also targeted perfumery companies who require alcohol for perfume manufacturing. And then there are various traders through which we can export this ENA to many African nations.
Okay. And ENA prices, you think that they will stabilize here only? Because I remember ENA prices were much higher before. So you think 59.60 should be the bottom?
Yes, I believe so. But again, it's tough to make any comments.
Right. What are the margins on ENA and margins on ethanol? Okay, I'll come back in line. No problem.
Yeah, thank you. Thank you. We have the next question from the line of Dipanshu Pandey from Solara Wealth. Please go ahead.
Hello, am I audible?
Yes.
Yes, you're audible.
Okay. So my question is regarding the demand for the Punjab whiskey which you have launched recently in glass edition. So how is the consumer response for that whiskey, and what are the margin advantages which you are gaining on this glass edition comparative to the normal Punjab whiskey which you have launched earlier? Thank you.
See, the market response has been positive so far. Of course, everything takes time for a new product to come into the market. But overall, the response has been positive, and I think we'll continue with the product going forward. When we talk about the margins, since it's a new product, we have to price it very aggressively. and the packaging needs to look premium, I think the margins are currently lower than our original offerings. But this was a necessary step to increase our portfolio, so we had to make this decision.
Okay, so do you see margins expanding in future, obviously, as the product will further grow?
Yes, that was the thought behind it. And also, if we want to increase our volumes, and our product portfolio must grow along with it.
Okay, got it. Thank you, and all the best for future.
Thank you.
Thank you. We'll take the next question from the line of Saket Kapoor from Kapoor Co. Please go ahead.
Yeah, namaskar, sir. Thank you for the opportunity. Sir, firstly, if you could just explain slightly in detail the dynamics of the ENA industry currently, and what has led to these lower trends in the realization. If we remember, sir, the averages for the prevailing few months were in the higher 70s. Correctly there, sir, and your thought process.
No, prices of ENA a few months ago were around 69, 70 rupees a liter. But with some companies like ours who have the flexibility between ENA and ethanol, also getting lower allocation for ethanol, there has been an increased supply of ENA in the market, which was expected, and hence, prices have come down with the increase in supply. So that's why this current trend is playing out, which I had also, my last earnings call 3 months ago, I had highlighted this fact that moving forward, we expect the ENA market to be very competitive, and we will have to price our product accordingly. So the management was aware that this trend will play out.
So to understand, it is the incremental volume that has created the price slump and also the RM falling. That means our conversion margins have improved or have remained
yes,
lower?
Of course. With the raw material prices also decreasing, it has helped us to decrease the ENA prices in the market. Otherwise, we would have been working at negative margins if the raw material prices had not decreased. But, with the raw material prices now going down and the rupee depreciating as opposed to the dollar in the last 3-4 months, this opens up two markets for us. One of ENA being exported out of India, and secondly, the potential of replacing the import of industrial alcohol in the country mainly from USA and Brazil for pharmaceutical companies.
So last point, can you deliberate once again? I just missed it. The export of...
So India currently imports a significant amount of industrial alcohol for the use of pharma industry. So with the rupee also depreciating and the raw material prices also decreasing, we hope now to start competing with the imported alcohol also.
Okay, sir. Are these grades different than what we are manufacturing? Since you are telling that a large quantity of industrial alcohol is imported, so manufacturers like us, product profile is different?
The product is same. For anyone who has the flexibility for an ENA license can supply to these companies. Anyone who just has an ethanol license cannot. But with the increase in prices in the domestic markets, we were not competitive with the import market in the past.
Okay. And sir, secondly, on the purchase of stock in trade, can you explain the nature, sir? In the P&L for this quarter, we have found a significant purchase of stock in trade to the tune of 83 crores. What is this attributable to?
No, that is not PML. That is.
PNL, sir. I'm talking about the profit and loss account. In the profit and loss
Okay.
account.
Yeah. So I think this figure that you're referring to is our oil trading business, 83 crores revenue. So from now on, we've decided to, list our oil trading business separately, because we have always imported oils in bulk throughout our past, but earlier our refining capacity was a lot more. So most of that oil used to come for our captive use. But since our refining capacity has now decreased, to get good prices in the global market for oils, we continue to import in bulk, and where it deems fit, we decide to sell this product in high seas or bring it to India and sell it from the port. So for greater transparency and to show our investors the different verticals, we've decided to now list these numbers separately.
Right. A small point, I joined the queue. Sir, is it the availability of our raw material, that is maize, corn, that is leading to these the lower price trends, and there is also a ramp up in capacity across the country, I think so, for the ENA? Just to understand the dynamics, why have the realizations trended downward? Whether this is a growth in market or growth in market along with growth in the output, or if you just could give final comments on that.
No, as explained earlier, again, Alex, Ian, of course, maize prices have an impact in us, allowing us to reduce the prices of ENA. I don't think there's significant ENA capacity coming in the country. There has been a significant expansion in the ethanol capacity in the country, but not towards ENA as much. As explained earlier, with a lot of companies getting lower allocations for ethanol, the ENA supply has increased in the market, hence the decline in prices. There are 2-3 factors that have played this, not just one.
Right. And this trend is continuing for the ensuing quarter also. There is no parameter that the realizations will see an uptick.
For now, prices are somewhat stabilized. Let's see what the coming quarters hold.
And we are running at optimum utilization.
Yes.
Thank you, sir. All the best.
Thank you. We will take the next question from the line of Heli Shah from Arihant Capital. Please go ahead.
Thank you for giving me this opportunity. My first question is, what are the key drivers behind the 9% EBITDA margin this quarter, and sustainable do you believe this margin level is going to be forward?
I think margins have been somewhat consistent, given the nature of the business. Raw material prices have decreased, but so have ENA prices in the market. The company is running a more efficient business now with the old edible oil unit closing down. So, of course, all those factors have played a role in this.
Okay, sir. My next question is, what kind of volume growth are we targeting for FY26 and 27? And do we intend to increase shift towards ENA segment?
No, the increased shift towards ENA is happening as we speak. Volume growth would be difficult for this financial year because we're already operating at 100% capacity utilization.
Okay, sir. And my last question is, could you update on the progress towards entering IMFL segment? Like, what are the expected timelines and targeted categories, and your outlook on Punjab liquor market?
I can't give a set timeline as of yet. The company is working towards it, and this new product in IMFL market is a stepping stone. We've added 2 more products in the IMFL market, and we're focusing on that in the coming financial year aggressively. And also working towards, seeing how to enter the Punjab market. And not just Punjab, if we enter IMFL, we have to also enter the surrounding states. So currently working on that strategy.
Okay, so that's it from my side. Thank you.
Thank you. We will take the next question from the line of Majid Ahmed from Pinpoint X Capital. Please go ahead.
I'm audible, sir?
Yes, yes.
Yes, sir. Sir, my first question is especially what were the DGGS prices during the quarter and how has the demand been, sir?
The demand for DDGS has been good. The prices for maize DDGS for the quarter, I think, were around 21 rupees on an average. So the demand and the prices both have been good in the market.
Okay, sir. And sir, what is the plan on the real estate part, sir?
No, so the real estate business, we've got some inventory left, and it's taking its time to sell since it's plotted inventory. So prices have increased in the market. So we're seeing a slightly lower demand, but we're not too stressed about it. I think it will sell it at its own time at a good price.
Okay, sir.
Most of the stock has been liquidated in the past few years.
And sir, what about the oil trading segment, sir? Like, what are we planning to do? Like, currently, like Q4, what type of revenue are we looking at? Q4 or?
So as explained earlier during my call today, oil trading is a part that was always a part of our business. Earlier, it was not shown separately because, to get oil for our refinery, we have to buy from overseas, and to get a good price from the overseas market, we have to buy in bulk. In the past, since our captive consumption was a lot more in our refinery, most of the product was used, and whatever the excess quantity was there was either sold high seas or once it arrived at port in Kandla. Now, since our refinery capacity has decreased, we're continuing to buy oil in bulk in the global market to get good prices. Hence, we either decide to trade that in high seas or at the port. So it's these numbers are being reported separately from now on for just greater transparency for the market.
Okay, sir. Sir, the Swaka maize unit is expected to commission the next quarter. What is the expected revenue and margins, sir? And do you have any offtake agreement?
No, so this oil can be sold in the market. We don't expect our revenues to increase significantly because of it, because the oil that we sell in the market leads to a decrease in the price of DDGS, but it has a positive impact in our margins because this is a forward integration and nothing more.
And sir, you also launched this Punjab Special Whiskey. Like, what is the revenue per box and what type of volume growth and trajectory, sir?
See, for now, the volumes are quite low because it's a new product that has been launched. And the margins also, as compared to our previous brands, is lower because we're pricing it aggressively. So, but the positive, we've gotten a good impact from the good feedback from the market. So we hope and expect the sales to grow in the coming times.
Okay. Got it, sir. Sir, with 70 crore additional debt for 150 KLPD expansion, what would be your peak debt level, sir? And how comfortable are you with the interest coverage ratio?
I think the company's interest coverage ratio is very good, around 6 or even greater, 6.9 as far as I know. And the debt levels are, as we speak, I think it should, we're at peak debt and it will only go lower. Our working capital utilization as of today is very low. So I think we're quite comfortable where we are. At the end of quarter 3, our consolidated debt was 494, which includes working capital and our long-term debt. And I think with the coming quarters, it'll only come down lower than this.
Okay, sir. Got it, sir. Got it, sir. And what about the working capital cycle, sir? Like, what are we expecting going forward, sir?
I'm
Are
sorry?
we any plans about the working capital cycle, sir? Are we planning to improve it, or how are we targeting, sir, post FY2026?
No, I think it will improve with the times to come, especially with the edible oil business, major part of it being closed, which was very working capital heavy. So I think it will improve.
Okay, got it. Can you give me any like working capital range that we're looking to improve? Like that would be helpful.
I'm sorry, what do you mean by working capital range?
The days, sir, like currently we have around working capital days around 40 to 50 days, cash conversion on 70. Like, how are we then incrementally reducing it to, sir? That's what I'm trying to understand.
See, I can't. I'm sorry, but I don't have an exact target that we set as a company. What we set as a company is, utilizing the least amount of working capital possible. As of today, our working capital limits are mostly quite underutilized. So, given that they're underutilized, I believe that our ratio will also improve accordingly. But we don't have a set target.
Okay, got it. Yes, sir, that's all from my side, sir. Thank you.
Thank you. We will take the next question from the line of Bhavesh, an individual investor. Please go ahead.
Thank you for the opportunity. Good morning, Mr. Mittal. With respect to the proposed sale of the land parcel, could you clarify the total area of the land in acres under consideration? And additionally, how does the management plan to utilize the proceeds from the sale? Would this primarily be directed towards debt reduction, acquisition of remaining stake in Swaksha Distillery, pouring into the IMFL segment, and distribution in the form of dividends, or any other strategic purposes?
Good morning. Thank you for that. So, the land with the company was close to 16 acres, and some portion of it was from lease from the Waqf board. So, the proceeds from the sale of this land will mainly go towards the acquisition of the 25% at Swaksha Distillery.
But it's the area is around 16 acres. So if I calculate, the cost of the land value should be around 250 crores.
No. I
No?
don't think it's anywhere close to that in the market we're sitting. Maybe in Bombay it is, but not in Bathinda, Punjab. I think it's the realistic value in today's market. I think is anywhere close to the realistic value is 45 crores.
45 crores, that's very low. Like, it's a 16-acre land parcel. So even if I calculate the lowest amount, it should be around 110 crores.
No, what is the lowest amount were you taking per acre?
Per acre, I was taking around 3,000 to 4,000 per square feet. Sorry.
No, prices here are nowhere close to that, unfortunately. I wish they were.
But is it a redevelopment land? Is it a industrial land? What exactly it is? Like, if the developer or the company purchases it, would it be used for construction of residential property or some other property?
So currently it's passed as an industrial land, but whoever wishes to whoever purchases this will develop a residential project there. So the CLU can be changed, but that's not an issue.
Okay. So my next question is with respect to the 150 KLPD capacity coming operational this quarter, what kind of incremental revenue contribution should we expect on a steady state basis?
See, that mainly depends on if we are getting any further ethanol allocation and what kind of numbers we get from there. So currently, as everyone is aware, the allocations are lower than expectation. And depending on the next cycle by the OMCs and what allocations are given, it really depends on that.
But we will achieve the 3,000 crore mark this financial year, and with the PAT growing 35-40%, because we have already achieved around 2,300 crores in the 9 months. So and the PAT has grown to 100 crores in the 9 months. So looking forward, we can see 3,000 crore and 140 crore mark. That's a 40% growth year on year.
See, we are trying for the same and we're working for it. But as explained, we have had to increase our ENA sales given the current market situation, and prices there have been very competitive. So yes, although the management is trying to reach the magical 3,000 crore figure, and I think we will be.
Biodiesel also should contribute to this, because you have already completed the 75 KL construction. So when do you see the revenue flowing in?
See, the biodiesel prices offered by the OMCs were not viable. So hence the company did not partake in the tender. Unless there is any revision in the prices of biodiesel, it will be very difficult to participate in the current tenders.
So the prices will fluctuate between 80 to 90 only. That's the trend going forward, I can see. So the company won't participate. So then why will you what will you do with the plant then, like 75 KL? How will you use it?
No, it's very difficult to make a forward statement saying that the prices will remain at 80 to 90. Prices were much higher before that. Just last year, the prices were around 124 rupees. It's I think it's a difficult call to give a forward statement that the prices will remain around 80 to 90. The biodiesel sector across India is struggling, and I believe the government is aware of that. We expect in the coming times, on the contrary, that the policy will be improved so that the biodiesel sector again becomes viable.
I hope so. Sir, I have just two suggestions, no more questions. So first is regarding your website. So if you could update the biodiesel section with the latest pictures of the plant and replace the edible oil section with maize oil refinery and oil trading business. This will be one suggestion. And the other one, if you're seeing good response to the launch of Punjab Special Whiskey in premium glass bottles, I suggest launching Green Apple Vodka in premium glass bottles as well with a bit of rebranding. So this could help elevate the brands and provide insight into the areas for the improvement in future whiskey and vodka launches within the IMFL segment. Once you have done that, dedicate a separate slide of premium offerings in your investor presentation and a separate page on your website to showcase the company's premium offerings. So this could help attract both current and potential investors. That's my two suggestions.
Oh, thank you. Thank you a lot. Suggestions taken very positively, and we will work on it. But thank you again for your suggestions. I think they were very good. The market demand for IMIL glass bottle in vodka is not there. So in glass bottle in IMIL, there's only demand for whiskey. But
okay.
But we are working towards increasing the volume of our Green Apple Vodka in PML. But other suggestions are all very good, and we'll work towards them.
But you said that you have a couple of launches coming in the next financial year. Like somewhat I couldn't hear that apart from this one glass bottle, you have launched or you're launching other two brands.
We've launched two more products in the country liquor market. But they're not in glass bottles. They are in PET bottles.
Okay, so could you upload that as well in the updated presentation if not in this presentation, but in the Q4 presentation.
Sure, will do.
Thank you. We will take the next question from the line of Rahil S. from Sapphire Capital. Please go ahead.
Yes, good morning, sir. So have we sort of given any sort of guidance for, EBITDA margins going forward? At what rate it will sustain in coming quarters?
I don't wish to give any forecasts on EBITDA margins because our industry is going through a transitioning phase, and same with our company. So although raw material prices are at a good range, so is the prices of ENA has decreased. So it would be very difficult for me to give any forecast. But yes, the company is trying to sustain good margins as we have done so in the past.
And with the new sort of capacities coming in, when will we see the optimum benefit of it on our volumes and revenues?
It's just explained to the last few questions. In the last 2-3 questions, I've just explained this. The revenue optimization from this added capacity depends on the next cycle from the OMCs and what kind of allocations that we get. So currently the allocations are lower than expectation, and only if they increase will we expect a volume or revenue addition from this added capacity.
Oh, okay, sir. Thank you. All the best.
Thank you. We have the next follow-up question from the line of Dipesh Sancheti from Manya Finance. Please go ahead.
Yes, sir. Just wanted an update on the Goel distillery. What is our plan on the 250 KLPD? And going ahead for the next 2 years, how is our capex lined up?
So for now, we've decided to hold to the Goel distillery capacity expansion, and any further expansions into the ethanol business, unless there is a clear set policy on the path forward. The company, is now seeing that there will be some policy changes and needs to have cash and resources in hand for any further investments. One being sustainable aviation fuel. That would be a capex heavy project when there is a policy, and the company needs to be prepared for that. There are other products also that the company can look to invest in, whether that is isobutanol, or the company is also, actively looking and considering an investment in setting up a malt plant, which would be a vertical addition to our distillery business. So for now, we're taking a pause on any further ethanol capacity expansion, which will depend on the future policies. But the company is, at the meantime, looking for various other avenues and where to invest, and when the time is right, to move fast on that front.
Right. And what is the average cost of debt, if you can mention? And is there any interest subvention which we have got in this quarter?
No, yes, of course. For our Bathinda unit, in the long-term debt, about 90 crores is under interest subvention, where the average interest cost is around 4.5%. And even at the Swaksha distillery, one of our loans of around, I think, 50 odd crores is under interest subvention. Besides that, I think the average cost of debt would be anywhere around, I think, 8%. Or even lower, I think 7.5.
That is including all the subvention, everything. I think last time it was around
No,
six and a
that's
half.
excluding the
Excluding.
intersubvention.
Okay. That's excluding. Right. So just wanted to understand our total capacity which we are having of ethanol and ENA. How much is dedicated ethanol? Because that is what we have taken the loan on subvention. So how much of it is that we cannot touch that and we cannot produce any ENA from there?
So for Bathinda, that's 350 now with the added addition, and for Kharagpur that's 150.
So total in 500 KLPD we have to produce ethanol only.
Yeah.
And rest of the capacity we can use it as ENA, dedicated ENA.
Yeah.
Great. That gives a lot of clarity, sir. Thank you so much.
Thank you.
Thank you very much. Ladies and gentlemen, due to time constraint, we will take that as the last question for today's conference. And with that concludes the question and answer session. Thank you, members of the management. On behalf of BCL Industries, that concludes this conference. Thank you all for joining us, and you may now disconnect your line.